Today we are strapping in because, well, we're analyzing the sudden, really aggressive surge in Amazon stock AMZN.
And not just the surge, but the flurry of analyst reports that came right after. All very high conviction.
Exactly. And the big question everyone's asking, the one we're really digging into today, is this. Is the path to $300 a share? Is that realistic now?
It's more than just a price move. I mean, this is a whole narrative reset on Wall Street. Amazon's trading, comfortably above 232. And that level is a huge technical and, frankly, psychological breakthrough. It's making everyone reconsider their models.
That's our mission for this deep dive. We've got a stack of these detailed reports, all pointing skyward. We need to understand why the market's perception is shifting so fast right now.
So we're distilling it down. The core drivers, the fundamental change, the massive role of AWS.
And what the charts are telling us about where we go from here.
Let's just jump straight into that fundamental pivot, because that's where the real story is.
Yeah.
We saw this wave of price target re-ratings just flood in after what the reports are calling a truly transformative earnings beat.
It really felt like Wall Street was playing aggressive catch-up.
Totally.
I mean, you look back just a few months, and the consensus targets were kind of hovering around that 250 range.
That was the ceiling, the high water mark.
And now, we're seeing major firms just leapfrogging that. They're moving to 290, and that aspirational $300 target is officially on the table.
And the key insight here for you, the learner, isn't just the number. It's the story behind the number that's changed. For the last, say, 18 months, the whole Amazon narrative was about cost cutting.
Right, streamlining logistics, improving efficiency, basically fixing the retail business.
Exactly, and you value a company on that basis very differently. It's mature, it's stable.
It suggests, what, controlled, maybe modest growth?
Precisely. It keeps the PE multiple in check. But these new reports, they're telling us that conversation is over. The focus has fundamentally shifted to AI growth.
And that changes the valuation completely. You're not looking at a mature retailer anymore.
No, you're looking at a growth engine again. And that unlocks dramatically higher price targets, because analysts aren't just looking at next quarter, they're modeling all the way out to 2026.
Wow.
And their collective belief is that the market is still seriously, and I mean seriously, underestimating the revenue from new AI-integrated cloud services.
So there's hidden growth that just hasn't been priced in until now.
That's the argument. We saw this one quote in a report from a major firm that I think just sums it all up.
What was it?
Amazon is the sleeping giant of AI, and it just woke up.
That says a lot. It implies everyone was looking at the wrong thing, maybe too focused on retail boxes and vans.
While the real growth engine was getting ready for this next huge wave.
Yeah.
But that quote is the feeling. The numbers are the justification.
Okay, so let's shift from that big picture AI narrative to the actual engine driving this. Because everything, the upgrades, the excitement, the path to 300, it all comes down to 3 letters.
AWS.
The profit engine.
It's the whole bedrock of the corporation. And the most important number in all of these reports is the AWS growth rate. Cloud growth is accelerating. It grew 20% year over year.
20%. Why is that the magic number? I mean, it sounds good, but what makes it so different from, say, 18%?
It's a benchmark. For the last few quarters, there were these nagging fears that cloud spending was slowing down globally.
That the hyper-growth phase was kind of over?
Exactly. Hitting 20% just decisively debunks that fear. It's validation. It shows AWS isn't just holding on, it's capturing new spending right as this next tech investment cycle kicks off.
So it's the acceleration that matters.
Right.
But, we always hear about AI being software. Why are the reports so focused on the raw infrastructure from AWS?
That's the beauty of the AWS model. It's resilient. AWS is accelerating because, and this is a direct quote, every major company needs Amazon's infrastructure to run their AI models.
So it's like the gold rush analogy.
You've got it. Don't bet on which miner will find gold, just sell all of them the shovels. The demand for the underlying compute power is just exploding.
They are the neutral, necessary layer. And that strength shows up in the overall company numbers too, right? Total revenue up 13% to over 180 billion.
An incredible number. To be that big and still grow at 13% is just remarkable.
Which brings us to the second pillar of this whole bull case. It's not just growth.
No, it can't be. To justify $300, you need profitability. And these reports are all highlighting the stability and the expansion of their margins.
Right. Growth without profit just burns cash. And the number the analysts are all pointing to here is the operating income.
$17.4 billion.
It's a staggering figure.
It's the evidence. It shows Amazon isn't just growing, it's growing efficiently. That cash flow is what funds the whole AI infrastructure build-out that they're banking on for 2026.
They're basically printing cash to fuel the next cycle.
And that's how you connect it back to the valuation jump.
How so?
Well, when a company this massive shows you 2 things at once, Revenue acceleration, that's the 20% AWS growth, and margin expansion, that's the $17 billion in operating income. It just fundamentally changes the math for the PE ratio.
It lets analysts justify paying a higher price for those future earnings.
It makes the whole bull case defensible. The growth is real, and the profit from that growth is confirmed.
It's a virtuous cycle. Demand drives AWS, operations turn it into profit, and the profits justify the higher stock price.
That's the logic. And while the fundamentals tell us where it's going, the technicals tell us when the momentum really shifted.
Okay, let's ground this back in the price action. Right now we're at, what, 232.52. The reports seem really focused on that recent move.
It's a textbook breakout. You have to remember, the stock spent weeks just consolidating, kind of stuck around that 220 level.
A lot of indecision there.
A ton. So that clean break above 230, it confirms the momentum has just decisively shifted. The bulls are in control.
What does a clean break really mean for the market?
It means conviction. The sellers trying to hold the price down were just overwhelmed by buyers. And importantly, it probably triggered a big short squeeze.
So traders betting against the stock were forced to buy back in.
Which just adds more fuel to the fire, independent of the fundamentals.
So looking ahead, what are the key levels the reports identify? If the stock does pull back, where should you be looking?
The analysis is pretty clear on this. For support, 225 and 220 are now considered massive levels. The reports are calling these the buy the dip zones. The market believes any drop to those prices would be met with a lot of institutional buying.
So pretty strong floor has been built. What about the ceiling? What's the resistance looking like from here?
And that's the other fascinating part of the technicals. There's not a lot of resistance directly overhead. Between where we are now and 250, the chart is described as, as blue skies.
Like a clear highway. Not a lot of old sellers waiting to get out.
Exactly. Which suggests the path to the next psychological barrier could be pretty smooth. And that barrier is $250.
That's the next big test.
That's the one. Clearing that level would confirm the momentum needed to really start talking about 290 and 300.
Okay, let's wrap this all together. The case for this moonshot. It's built on a few key things. First, the analysts pivot from valuing cost-cutting to valuing AI growth.
Second, that re-accelerating AWS growth. The 20% YoY number is key, driven by that foundational AI demand.
And third, that it's all paired with huge profitability. That $17.4 billion operating income figure really stabilizes the whole valuation.
Right. And the conclusion from all these reports is basically that it's a valuation mismatch. With growth picking up and margins expanding, the current price around 232 just looks cheap compared to where they think it's going.
The bull case is stronger than it's been in years.
Definitely. The analysis suggests the stock is just fundamentally undervalued compared to its actual growth path.
A really powerful conclusion. But to give you, the listener, something to mull over, we have to talk about the one critical assumption that's driving all of this.
Yes, the big forward-looking risk. The core assumption across every single one of these reports is that the market is still underestimating the revenue that will be generated by AI cloud services in 2026.
The whole bull case is built on that future projection.
It is.
So our final thought for you to explore is this. What stands out to you as the biggest risk or opportunity in that projection? What if that underestimation is even larger than analysts predict? Could that push targets even higher?
And conversely, what if that large-scale AI integration just takes longer than they think? The timeline could change drastically, even if the final outcome is the same. That assumption about the speed of adoption is where all the future volatility is hiding.
Something to think about for sure. Thank you for joining us for this deep dive into the Amazon ascent.
We look forward to connecting the dots on your next set of sources.